Exactly 5 months ago, on this very day, which is 24th of March 2020, the Nifty hit its 52-week or multiple year low at about 7511. Remember that earlier this year we had the coronavirus pandemic which hit the global markets, and we saw the Nifty slide as much as 40% from its lifetime high in about 45 days. And ever since, the recovery in global markets as well as the Indian markets has been substantial. The Nifty has recovered more than 50% of its lost ground from its 7511 low that it hit in March 2020 as well. But with that, what has happened is the moving averages have started moving higher as well. An interesting technical analysis pattern which is called as the golden crossover that has been formed on the daily chart of Nifty. What it means is the longer term moving average is now below the shorter term moving average, which means that there is increasing momentum on the upside that we are seeing for the Nifty, due to which the shorter term moving average has seen a steep upward slope that we have clocked for itself. In other words, the 50-day moving average has also crossed above the 200-day moving average. That's the sense that I'm referring to as far as the golden cross is concerned. Now, it's a technical analysis pattern which gets formed very rarely, probably about once or twice in a year, and that is exactly the point that I'm going to drive is in the last 2 decades there have been only 13 instances of a golden cross that has been formed on the charts of Nifty. Let's have a look at how many of them have been winning and losing trades. 8 out of 13 trades that have been winning, and 5 trades have been losing trades out of the 13. So that's a hit ratio which is in excess of 50% as well. The average return that each of these trades has generated over the next 100 days when the golden cross has been formed has been in excess of about 6.5%. So that's the kind of return that we are looking at 100 days from now as well, in case history is to repeat itself. But like we have been pointing out in the past as well, this is an extremely polarized market and there are a select number of stocks that are driving it higher. And if you have a look at the contribution chart of the Nifty since 24th of March, you can really see that there has been one stock which has contributed or done the heavy lifting, which is Reliance Industries. 937 points is what it has contributed to Nifty's gain of more than 4,400 points since 24th of March itself. Then you have a surprise candidate in terms of Eicher Motors, which has contributed more than 650 points ever since. And then you have Infosys and HDFC Bank, which are the heavyweight counters that have contributed more than 300 points as well. Followed by TCS, ICICI Bank, HDFC as well as ITC that have contributed more than 100 points each to the Nifty's gain. And to top it all, you have Maruti as well as L&T, which have contributed about 85 to 89 points respectively to the Nifty's gain that we have seen since 24th of March this year.